Hey guys, and thanks for watching Smart Money Minds. I realized that in a lot of my videos, I really just talk to you about technical analysis and just show you a bunch of charts and tell you how I made certain plays and thus I made money. But I never really explained what technical analysis is, how it's a bit different than what you've probably heard of as fundamental analysis. So I'm going to talk to you today about how technical analysis works, what's the difference from fundamentals. I'm going to show you some examples of some of the plays that I make and how it relates to technical analysis and how the money making process works. It's quite simple in a way, but I will explain it in a bit of detail here, so bear with me. Firstly, how does it work? So a lot of people think stock trading and day trading or even swing trading is a lot like gambling. But you have to think about how casinos make money. Casinos make money because they know that in the long run, they're gonna get the money from you. And how does that work exactly? So roulette is my best example here because you know that there's 0 and there's double 0 on the roulette table, and so your chances of winning even black and red is less than 50%. How is it that you win then? Like sometimes you win 5, 6, 10 times out of 10 on a roulette table. How does that work? So we have to think about the law of large numbers. So you may have short-term variance. So you may have 100% of the time you guess red and it's red. It's like flipping a coin. You can get heads 10 times. But on the long run, if you do 100 flips, if you do 1,000 flips, 10,000, 100,000 flips, eventually the average will start to become 50-50. And so on a roulette table, if the casino has an edge of say 52% versus your winning percentage of 48%, that 2% in the long run, the casino will win every time. In the stock market, you have to start acting like you are a casino. You have to play plays that gives you that edge. And so you make that 2% over a long period of time. Now, the second thing I'm going to talk about is managing your risk to reward. So sometimes you may lose more times than you win, but you can still come out on top. So let's say, for example, you make one win, that's $100, okay? And then you make 3 losses that are $30 each. But your losses altogether is only $90, but you're still up that $10. So in the long run, you've lost more times, but you're still coming out on top, and that's what I mean. And the last thing I'm going to talk about here is the self-fulfilling prophecy of technical analysis. It sounds a bit goofy, but the thing about patterns and technicals and indicators is that the more people that see it, the more likely that pattern will work out. And that's totally okay, because as long as you make money, it doesn't really matter, because when the pattern breaks out, you have a momentum shift, and I'll show you that in examples coming up. So now a lot of people talk to me about fundamental analysis and how I never tell you about the profits and the revenue and business model of certain companies. A lot of times I don't even know what that company does. All I look at is the chart and looking at the technicals. So what technical analysis is looking at certain patterns. You look at historical data. Has this pattern played out before, and will it likely play out again? We also look at momentum and hype. So sometimes stocks are running up, like meme stocks like GameStop or AMC, stuff like that, or a year ago or however long ago, Beyond Meats was running really hard. So this is all this hype and volume that everybody's interested in. And then we use indicators to look for support zones, resistance zones, where people are buying and selling at those price points. Now, comparing it to fundamental analysis, we want to measure a company's value. So we want to look at all their paperwork, all their revenue, all their earnings, what's their competitive advantage, so that in the long run, we have to see if a company is maybe undervalued, and that in the long run, if we invest into it, it'll go up over time. But that's not what I'm interested in. I really only care about maybe short-term variance and looking at hype, because if I can catch that hype, that's a 10-15% move sometimes. So let's take a couple of examples here. The first one I have here is the MRMA play and a Riot play, so I'll get back to this. So MRMA, we look at this 5-minute bull flag here. So looking at this move right here, so this is a classic pattern where it is a bull flag. So it's actually a bit of a 15-minute bull flag here. If you take a look, so if you look here, that's a 15-minute bull flag, but we're gonna zoom in on the 5-minute here. So 5-minute looks really, really good. We have a couple criteria. We have decreasing bear volume. We have this couple of touches, top, bottom, top, right? So we have good touches all along. And now we can draw a couple of trend lines, and as you look at it here, this fits another criteria where it's starting to become a falling wedge, which is forming this bull flag. So now goes into the risk and reward. So let's say I buy here at 422.50, for example. So 422.50, okay? And what I'm gonna do is I'm gonna set my stop at 421, maybe just below it, maybe 421 here. And because if this play goes down and breaks this low, then it is likely to be invalidated and I'm gonna take a small loss. But look at what happens is if this play worked out, and it did work out, look at the percentage gain that it gave. So from here, 422.50, this is a 3.5% move, while as if I take a loss, maybe that's only 0.4, 0.5%. So because this is a high probability play, you have good risk to reward. That's where you're gonna make your money with technical analysis. Now let's take a look at another play on Riot here. So Riot, we're looking at the 15-minute volume climax reversal hammer. So reversal hammer, this candlestick here is a candle where it signals reversal. And you also look at the volume here, where it's higher than all the other volume adding up here. So this is a oversold bounce play opportunity. So let's zoom in on the 5-minute here. We look here at the 5-minute chart. So this sell-off, you see once again the volume climax, and you got immediate buying right in this zone at 30.91. So what I do is sometimes I look back further and see if this is a support zone right around this range. So you see here where 30.80, 30.60, right over here, it's pretty much a support zone right across if you take a look right over here. And that's why we look at historical data. Let's zoom back in here. So what I'm assuming is this is going to be an oversold bounce. So what I can do is I'm going to make an entry, let's say at 31.40, let's say right over here. And I'm going to set my stop at 30.91, which is the low of day here. So right now I'm risking about 1.5% here if it breaks down back to the lows, okay? But if it keeps going, I'm thinking maybe we get a decent bounce. So let's say from here, we actually got a bounce of about 3 to 3.6%. So this is another good risk to reward play, because look, it came down, it gave us the volume climax, gave us a reversal, set a higher low right here, and a higher high. And so now we have a 5-minute uptrend. So the thing about this is in technical analysis, a lot of people are looking at a similar pattern as mentioned previously. So now that we have a volume decrease, and let's see this breakout. You see this breakout move right over here and continuation on the breakout volume here. So that means that people who were shorting are actually now covering, so they're buying. And now people who are seeing this pattern, see this breakout, are buying even more. Thus, you see the increase in volume. And that's how it becomes a self-fulfilling prophecy, because everybody is now buying and driving the prices up. similar situation here. So it gets to a certain point where the bears are tired or exhausted, and so the bears once again are trying to cover their positions. Now the bulls see this action and now they're starting to buy. So once again, another bullish push because bulls are buying and bears are covering. And that's why we have pressure pushing it up to the upside, because of this sort of self-fulfilling prophecy where everybody is watching these patterns and expecting it to go a certain way. Now, making money off technical analysis, we have to focus on a couple of things. There's all those gurus out there that are like, hey, check it out. Look at my wads of cash. I'm making, $30,000 a day. Follow me and see how I do it. That's unlikely, because unless you have a huge account, then sure, if like 2% of your $30 million account, you can make $30,000. Okay, great. But we gotta focus on base hits. What that means is, let's look for the 1 to 5% gains per trade. You don't need the 20 plus, 30 plus % trades, because if we hit this every day consistently, we will eventually make up all the home runs, basically. Think about like the Baseball Hall of Fame, that there's tons of people that have great batting average instead of hitting like grand slams and home runs every time. There's much fewer of those people compared to people who hit consistently. So we have to select our prey carefully. Pick the right ticker, don't force trades. The second thing is always reduce risk. We want to get out of losing trades quickly. You want to set your stops reasonably tight while you want to let your winning trades mature and get as much gains as possible. You want your reward to risk to be at least a 2 to 1 every trade, so that every time you make a trade, you can make a loser, you can make 3 losers, and all you need is 1 win to make it all back up. And that's why we have to focus on net gains as well. We lose 3 times, win once, but we can still be profitable. Think about that $100 profit example I talked about earlier. This is how I make money, and tons of people make money using technical indicators and analysis in the stock market. And if you want to learn more and understand this thoroughly and really make money for yourself, I have a course coming out really soon, so make sure you subscribe to a channel. I'm gonna keep giving updates. Like this video, and we'll see you guys next time.